I'm going to do my best to help navigate, if you will, the volatile markets. And we'll walk through. I figured today we just spend the whole session on the charts. We'll go through, we can go through maybe a few markets so I'm going to get through that. Let me know the markets maybe that we want to take a gander at, but I figure we'll stick with, some of the more interesting markets as of right now. So first, let's do this. I want you guys to fully understand, as I know you already do, trading indeed contains substantial risk and certainly not for every investor. An investor could potentially lose all or even more than the initial investment. We actually discussed that in our room sometime. Risk capital is money that can be lost can be lost without jeopardizing one's financial security or lifestyle. Only risk capital should be used for trading. And only those with sufficient risk capital should consider trading. Past performance is not necessarily indicative of future results. All software provided or purchased is strictly for educational purposes only. Okay, so we're going to continue forward here, and just again, got to throw that out there. I want you guys to know this is for educational purposes, but let's see if it can help, right? So let's go ahead and get out. What you guys are seeing here, and we'll circle back to this a little bit because it's not the most important part. Today, I did want to focus on the education component. If there's anyone in here, perhaps there is, we've been doing some free events, hosting them ourselves. And I'm going to share a link with you guys here in just a moment, where just to make sure you guys have access to all of our free sessions, free events that we offer quite frequently. But in that event, we started way back the beginning of the year, and we were trying our best to do as much, just education, because given everything that's happened and so on, we were doing our best to try to get people ahead of it, right? There are ways to mitigate risk in these instances. I want to encourage everyone to go 10 steps further than you think you should, especially today. Of course, we'll get through this today, meaning I will explain what I'm talking about. But when we're looking at the markets, this is what I always tell our members, right? The markets base themselves and function, if you will, on anticipation. So let's just take a look. Let's go over here and look at the S&P, right? So anytime we're really looking, this is the S&P futures, by the way, for any of those of you who are wondering. Ticker symbol in NinjaTrader is ES, the contract there being 0620, okay? So that's the future front-running contract. Now, the way that the futures especially function, because the futures they're the leading indicator, if you will, and is predominantly because they're traded for the most part around the clock, with the exception of what's called mark to market. It will close for about half an hour to just kind of close out all the positions, and then it reopens and so on. Of course, not over the weekend, but for the most part, it's open almost around the clock during the week. Now, because of that, we can see what is happening even overnight, right? This is global sessions, right? Especially you got the European session. You have all these different sessions that come into play. And you can see what's happening in the futures markets because people are still trading them. Now, granted, overnight trading is very minute in comparison to day trading and the volume and so on. But nonetheless, that should even encourage people to look at it, because if you think about it logically, right, and you say, well, how do the markets move? How does the market function? One way, orders, always. So if the market is going up, there are more buy orders than sell orders. That's irrefutable. That's just a fact. If the market in particular, in this case, the S&P, if it's going down, indeed, there are more sell orders than buy orders. And again, I know let's get through the basics, right? Because when we understand the logic, all the complexities start to kind of fall together. It's like the really complex puzzle until you get almost to the last piece. And then you're like, oh, of course I know where those last 2 or 3 go, right? So something like that. But yeah, again, logic moves the market. It's simply we're moving up based on more buy orders, and the inverse is true. The overnight, however, if we think about what's happening there's a decrease in overall, let's say, people or algorithms or whatever's actively placing during the day session. There's a lot less. So let's say that an institution wanted to come in and really move the market. Okay, maybe they're not trying to move it in their direction long term, but they really need to do something short term. It is much more possible to do that in the overnight because there's much decreased order flow there. So if we come in and we talk about the relation from buy to sell orders during the day session, we may have something, it could be huge numbers, right? But let me give you an easy number, 100 to 120, right? So let's say there's 100 on the sell side, 120 on the buy side. So that, of course, logically means that price is going to go higher to find, above sellers, if you will. But then in the overnight, let's say that there are only, a total of 50, right? In the previous example, there was 220. So let's say in the overnight, there's a total of 50. So what the institution or could be, I suppose, could be an individual, they'd have to have a lot of money, but they could come in and they could buy a lot less, right? All at once, and they can really move the market a lot less. They can move the market a lot easier based on less actual orders. Because again, the markets don't always function off of how many orders are being placed at once. They function off of the imbalance of buy to sell orders. So it could be a relation of, quite literally, it could be 3 orders in the market. And that's a fact, right? There could be 2 to the buy side, 1 to the sell side. And no matter what, price is going to go up. Now it could be 200 million to the buy side and 100 and, whatever million to the sell side. Again, the same thing. So that equation is what's truly moving the markets, not actually how many orders are always happening. But of course we know there's quite a lot. So I just want to throw that out there for the overnight. I'm certainly not encouraging overnight trading at all, but if you want to know, I generally do more swing trading. So, and if there's any of our members in the room, they'll contest to this. I'm not actively looking for, bunch of trades in a single day. I would rather sit back and take one single trade, or, a few or what have you over a week or a month or so on, and try to accomplish a much greater scale. Again, I'm not trying to talk anyone into doing that. In fact, we discussed this in the room this morning, which we're going to do. So let's go ahead and kind of get out to the analysis of it. So what you're going to see today as we move through this, you're going to see how this is applicable to multiple trading styles. But this is very crucial because when I change something, one little thing, it could be one little thing, right? Today in our live room, we walked through and we started on multiple markets. I believe I know we looked at the S&P, natural gas, oil. We looked at the euro dollar. We looked at Ford. We looked at, a bunch of Tesla, I believe was one of them. As a matter of fact, there were some trading opportunities that we discussed on those 3. I know that there was a euro dollar one, Tesla and Ford, I believe. So what happens when we take the methodology and we apply it, what then tends to happen is we go, okay, well, I don't see anything. So for instance, let's look at the S&P, and I'm going to ask myself some very basic questions. I know that trading, I don't know why, but somehow and some reason it's supposed to be complicated, right? Not really, but that's what we're all supposed to think. And in relation to, let's say, the institutions or big money investors and things like that, there is nothing complicated about it. Nothing. They're so very basic. It's almost, you almost giggle at it how basic it is because it's surprising, right? But again, when some reason, as it dials down into, from really big money into, you go to institutions, down into pension funds, down into retail traders and things like that. When you reach the retail trader side, things become a little bit, or become a little bit convoluted. Why? Because it's like a funnel. You start way up here, Warren Buffett style, right? And, he doesn't focus on this. He's not interested. I'm not going to speak for Warren. I wish I could even have a conversation with Warren Buffett, but I can tell you based on the information that he has provided that he does not focus on even this at all. He's a very long-term investor, right? So what he does is so very simple. And that's one way of doing it. I don't think many of us are going to focus on that. Especially not for shorter term, but ultimately that's it. He waits for price to drop and he buys. So it doesn't get more simple than that. When you get all the way down to the retail side, however, we do have a tendency to very much so overcomplicate things. Number one, because we're looking at a price chart, right? And we do need this information because it tells us definitively where price has turned, where it has reacted. We have all the information that one could need right here on this price chart. But by doing that, we start to see a bunch of candles. What do those candles represent? Well, they represent, obviously what the orders have concluded for that particular time period. In this case, we're looking at a daily chart. So I can open up this chart and look at singular candles, and I know that for that day, this is a representation of where price opened, closed, the high and low of the day. When we dive down even deeper than that, however, that's where it starts to get even more complicated, because now we're looking internal, inside of a day, and we're saying, okay, well, now what am I doing with the particular day? So it could be, let's say we're trending down. Well, we may have a 5-minute downtrend, but that 5-minute downtrend is inside of a 30-minute uptrend, which is inside of a 4-hour uptrend, which is inside of a daily downtrend. Even saying that out loud becomes convoluted. It's like, wow, well, what am I supposed to do with all of that information? It's very complex. So how's one supposed to do that? There are many ways to do it, right? Definitely our way is not the only way. In my opinion, it's the best way, but that's my opinion because it's the way we do it, right? So let's call that a bit biased there. Not very fair, is it? Having said that, we do try to simplify it to the best of our ability, and we're going to go ahead and get started with that now. So how do I do that? Number one, I want to define what the direction is of any given market. So here I'm looking at the S&P, okay? And I'm going to define the direction. Now, what's your first thought? Probably that, well, outside of seeing it on my chart, but if I were to just get on the phone with you and I said, look, what is the direction of the S&P? What's the first thing that you're probably going to think of? Well, I don't know, like what time frame? There's a lot of questions within that, right? So I can't just ask that question. I have to be very specific. Not only what is the direction, but what is the direction on the daily time frame of the S&P futures contract, right? So when I get very specific like that, then we can apply our methodical approach to it. Now, I obviously don't have time to go through all the nitty-gritty, the nuts and bolts of how we define it, but suffice to say, everything that I'll talk about is covered in our course. We cover it all the time. And we've been I will tell you this week in the room, we have been very just direct, okay? Because we have to take people from sometimes point A, sometimes point M. I mean, it could be all across the board, and we got to get them all to point Z, attempt to at least. And so that can be a little bit complicated in itself. How do we do that? Again, by simplifying. So everything we do is going to be simplified. How do we simplify a methodical approach? You have to apply a method to it. So if I'm going to say, draw an uptrend here, how do I do that, right? What is an uptrend? What does it consist of? Where do I draw to, right? All of this, what constitutes a trend, you get the point. So there's a lot of working parts here. And I do want to jump back over here just to show you guys, when I'm talking about this stuff, this, just so you know, is our Zone Street, the new name all of a sudden, the PFA Zone Suite strategy. And by strategy, I mean it's our automation, right? So all of this is fully automated here. And the reason I'm telling you this is because you can see that if it's possible to automate, then you have to be able to be methodical with it, right? Otherwise, it's too subjective, and you would not be able to put it into an actual strategy, all right? So if I go over here, first and foremost, I'm going to focus on that direction, right? Let's talk about a couple of things that we've looked at in our room, and then we'll give a little bit of analysis for ongoing as well. As I said, we'll look at maybe a few markets. So when I look at this chart here, there are very specific terms that we use and all that stuff, acronyms even. So all that's covered in our course. And if I say something that doesn't make sense, just kind of bear with me. And I'm just so used to our own terminology that I don't really take a lot of the time. So right now, here's where we get complicated already. We're saying, all right, we got an uptrend, but that uptrend has been broken. So what do I do now? Is that a downtrend, or, what is it? Ultimately, well, let me backtrack for a moment. When we in our live room, for example, this area specifically, 29, 10, 50. Now we talked about this area for about a month. It's been a long time. We talked about this area as we wanted to be the seller there. And there was one specific thing that happened going right into that. All right. It was going right into it that, as a matter of fact, one of our members emailed me that afternoon when this was happening. And so he, was just asking about what we had previously been discussing. And as I'll lay it out here for you guys. But ultimately, as price was driving itself back up here, why? Why can that possibly be happening? Because the economies have not opened back. I mean, some, at least in the US, and this is a US derived market, that has not opened back up, not even at that time back then, not even close to it, right? I mean, it was horrific at that point, but yet price starts to rally. Now, I want you to go back, check what happens on the days where we get the unemployment numbers. They are horrific. And that's putting it mildly, right? Sad, really. But look at what happens on those days. And if you notice, it rallies. It's interesting. Like look at today. Today was an unemployment number, yeah? So price rallied for the most part throughout the day until I can't remember what caused the decline, but suffice to say, when those unemployment numbers come out, price rallied right away from it, right? So you have to try to question why that's happening. And the whole way down, if you guys were in our free sessions, you've already heard me talk about this. So we were shorting the markets way back here, right? We were shorting the markets way up here. Now, in order to, let's say, prepare ourselves, at that time, we were talking about the simple fact of how price functions and what it's doing. So it was dropping so fast and so far because it was pricing in a lot of negative news. Because again, as I began this session, we talked about the markets functioning off of anticipation, right? That's where the orders come in, and that's what moves the market. What's happening on the way down is very abrupt moves. And again, it's doing that because it knows negativity is coming and it wants to get ahead of it. So what generally happens to the average retail trader is they think, well, let me just follow that, right? Because it's going to keep doing it, forever and ever, amen. It's never going to change. Well, if you can't adapt with the markets in advance, you might get yourself in trouble. None of us expected, I don't think, price to go down and up as fast as it did. Although we did discuss that and we said that that was highly likely. If, just being very honest, I did not expect it, right? There's no way for us to have predicted that, with the exception of just knowing that what goes up and down very fast is most likely going to do the exact opposite very fast. In other words, if you have a very strong down move, you're likely going to go right back up very quick as well. If you want to take a look at that, go take a look at oil, right? Look at that. So in a matter of a day, in a matter of 2 days, we've gone back about 75% of the previous day's drop, which was historical, quite literally, putting us into negative territory. We'll talk about that in a little bit. But again, what goes down very quickly is likely to go right back up equally as fast, or at least in similar fashion. So with this, that's what's happening. And as we arrived back at this area, we prepped ourselves. We said, yeah, well, price is rallying back up and we want to be the seller up around this area. I know you don't see it here on this chart. That's because there's a 4-hour level right in through here. Okay. So there's a 4-hour level, which I'll be happy to show you guys in just a moment, but that's what we were looking to sell the market. Now there's a couple things. If you kind of pull the pieces out of what I'm going to tell you today, hopefully it will help you. I'm not here to try to sell you anything. I'll be happy to help in any way that I can, okay? But a couple pieces to the puzzle that you might enjoy today. Number one is when price does this, okay? I'll tell you, remember the 29, 10, 50 area, we were already prepping to sell anyway, okay? As price rallies up, I want you to pay very close attention to what happens right here. Now, if I open my chart up, number one, this is super important. I'm never going to buy after price goes up. Okay, so my goal is to never buy when price is moving up. My goal is to always buy as price is moving down. Well, you'll say, well, that doesn't make sense. How do you buy an uptrend? How do you buy in an uptrend? Okay, pullbacks. So think about it. If you're in an uptrend, do you want to be the buyer as price is moving up in the uptrend or down? Down. I mean, that's how we do it. So we want to wait for price to move down. And that's, I would imagine, how many people do it, right? It's just very basic. Playing the pullbacks, I guess, is a good way of saying that. So even in the contextual trend, I still want to buy in the down move of it, right? Okay. All right. And I'll show you the most recent area that we discussed as well. So with that, if price has gapped up, so not only did price move or invert very quickly, right? It rallied very, very quickly there. So not only did it do that though, I want to bring you guys' attention to this specific one. The reason, because this is not what you may think. So I don't know if you guys remember this, if you even look at the S&P, but any of these, most of these other gaps that you go back and review, you're going to find that most of them, it was over a weekend or something like that, right? This right here was definitely not. This literally is mark to market right there. Okay. So we had the close of this day and then we had mark to market. So as I said, that they literally just close to close out orders and evaluate the markets. That's all they're doing. Okay. So the brokers have to handle the orders, right? That's where they'll execute your overnight margins. You don't want to get stuck in that if you don't have enough money in your account. So be careful. But when they do that, they settle. That's what they're doing. They're settling all of the orders. When price gapped up like this, that happened during that very short period of time. So right then and there, without a hesitation, we know that that is a form of exhaustion. All right. So if I'm coming up and I'm even remotely close to my supply, and again, I'm in an uptrend, remember, so I'm moving up and I gap up. That is a very big no-no for the buyers. Okay? Very big. So what will happen? And do your own research, right? Don't take my word for it, guys. Go back and do your due diligence. You should. I would encourage you to do that. So what you want to look for though is, again, a move to the upside, not just a move, but an extensive trend. So the longer it is, the better. And when it gaps directly up, so an uptrend gaps up, look to the left. If you have a resemblance of supply, you're almost always going to fall away. Okay. So what we discussed was originally I had a pending order to sell. So I was going to sell the market at 29.1050. Unfortunately, didn't quite make it there. So what we do is focus on what actually happens. So let me go over here and show you what did occur. Yeah, there's my 4-hour chart. Okay. All right. So there's my level. So as I said, 29.1050. This is the level that I was looking to sell. So you guys are going to wonder about the software. The software is, it's quite extensive. So I'll try to get through as much of it as I can. But suffice to say, it prints basically everything I need it to. It's my job, right, as my own trader, to determine if I want to be the buyer or the seller. We do that constantly, and I call it a little game that we play, but it's called buy, sell, nothing, right? And we'll go through and we'll say, just as fast as you can without hesitating. Don't think about this. Just as soon as I ask you, what's your answer? And that's how we're trying to do. We try to train the mind to not overthink it, just like call it robotic, but more systematic. Buy, sell, or nothing. And instantly you get an answer to that. And then you don't think any further. Okay. That's when we start implementing the execution. So the analysis comes from one place, the execution will come from the other. Larger time frame, smaller time frame, that type of scenario. Okay, so when I deemed a sell opportunity viable, I came here and I said, okay, great. So where am I going to do that? What I'm looking for is this very bright red zone right there. Okay, what does that mean? So the coloration of the zone tells me if the level in question has indeed been tested, retested, whatever you'd like to call that. But after it forms, okay, so after the level forms, have we returned and touched it? That's what we're looking for. This area right here, absolutely, it was bright red, not at all. If you notice the level just above that, you can see it's a pink color. This is actually red, same color, but it is a much lower opacity, right? It's reduced because that that particular area has already been touched. So as the one above that, and then there's two up here, you can see the coloration there, right? All of this changes. Same to the buy side. So this lower level has already been tested. This level has not. And these levels in through here have been tested multiple times, just same as these up here, because they're clear, right? For the most part, they're almost clear. Okay, so that's what you're looking at when I reference this bright red. It just means that it has not been touched since it formed. Okay, so we look at the area over here, right? And I'm going to take my chart. I'm going to scrunch it up so we can see this maybe on both sides. I don't think I'm going to be able to. Yeah, I will. All right. So over here, I'm looking for the location. When I get that, I'm going to go over here and apply my strategic approach. So that strategic approach was quite literally to come here and execute an order right out of the gate. Okay, just like that. So to execute an order right out of the gate, the 29.1050 pending order, so on and so forth. So as you know, guys, just like trends, everything is subject to change at any time. Well, when we gapped up over here, remember what I told you? When we gapped up, that was a form of exhaustion. So we also have means of confirming our entry, saying to me, not everything is perfect, Will. Okay, so if it's not, I get that and I understand, but could you add something to it, right? Could you confirm it for me, in other words? And obviously the market, they love to do that for you. It actually does us a lot of favors if we know what we're looking for. So over here, as price rallies up into that area, here's the gap on the smaller time frame. What I'm specifically looking for is a DVD. So if we open this up, there you'll see right here, we only have two means of execute, three total, but really only talk about two of them because the third one is just based on the structure of the market. And I really don't prefer that because a lot of people end up using it as breakout of peaks and valleys, and it's just not ideal in my opinion. Okay, so we have this little line, right? You can see that there's another one here. Now we're going to have lines all over the chart, right? If we go back, we're going to have lines all over the chart. We have them back here, right? You can see those are green. We have a red one down there, a couple red ones. Those are identical to supply and demand levels. I get the question most often, how do you know which level to trade and which not, right? That's the most, probably the most common question. My answers, albeit not verbatim, I suppose, but they're pretty much always the same. The analysis is the important part. The execution or the strategy, if you will, yes, it's important for being methodical, but ultimately it's going to do you, it's actually going to hurt you probably more if you don't know what side of the market to be on. So first I want to determine, should I buy or should I sell today, or should I do nothing? Okay, now once I've determined that, that is when I want to use the information on the price chart. So again, what I'm saying here is, based on my analysis, I, no way maybe did not want to touch any of these lines, right? Yeah, there's no reason for me to. Why would I want to sell at those when price is moving higher? Maybe the buy side, maybe we buy on the buy lines, but which would be RBRs, by the way. Okay, but we definitely don't want to be hitting the sell button by all accounts. Right? So we can wipe all of this out. Some may be winners, some may be losers. It does not, it's irrelevant to us because we wouldn't use them anyway. So again, that's the same thing with supply and demand levels. You guys are probably super familiar with that. Some of you probably more so than any of us. And that's good. So you look at that and you think to yourself, okay, well, how do I define my supply and demand, or how do I, my support and resistance, or whatever else it is? So I want to talk about the gaps, and then I'm going to do one other thing. I'm also going to push out some Fibonacci information today for you guys. So don't let me forget that in a moment. But definitely want to focus on that, right? So the gaps are exhaustion. We'll talk about the Fibonacci extensions and retracements here in just a moment. But that part is critical, guys. The analysis and then the execution. The execution is only going to take place in the right location. So when this occurred, then it activates my kind of go mode, if you will, right? It says, okay, we absolutely are ready to sell now. We weren't, yesterday, but we are today. Okay, great. So when that happens, again, it's like go mode. It's where, okay, well, give me the opportunity. And that's what I then begin to look for. Now, the way that I say it in our room is pick your poison, meaning we're either going to look for, again, there's really only two types of entries that we would even use. And one being RBRs and DVDs, one being supply and demand levels, right? So if I am a seller in this market, I want to quote unquote pick my poison. I don't want to try to do both, because if I'm trying to trade, let's say, a supply level, but then I get a DVD, and all of a sudden my whole mentality will shift into that style of trading, which is in our methodology, that is breakout trading as opposed to retesting a level, which, utilizing pending orders and so on. So what mentally I've done, or subconsciously, if you will, is I've made a change, right? And I didn't perhaps adapt to that subconsciously. So it can cause some problems. For example, you may see one trade happening when you're looking for another, and you may place your stop at one or the other, maybe in the wrong location, or you may get emotional and exit too early or even too late. It's usually not a bad thing, but ultimately it can shift your mind to a different way of thinking, and that's what we want to do. So we want to get used to one of them, try to perfect it is a harsh, it's kind of a strong word, but become consistent at it. And then we can layer on the additional, right? Okay. So we would want to say, okay, I'm going to use my supply level because I don't feel comfortable with, breakout trades in the beginning. Okay, great. So you have to gear your personality around that, because that's not going to, it is a little bit challenging, no doubt, because when you're looking to go short, price is always coming up to get you, which is, again, price is rallying when you're looking to go down. So that's a bit challenging on the mental side right there. A little bit easier is if we're looking at this, we simply take it as follows. So I'm going to open it up really well here. Okay. So here's how we would execute on the breakout side here. So where our lines print, like so, what we're doing before we ever get there is we're executing a stop limit order there, right? So let's say that price comes down and hits this low. Well, I'm already, my order is already there. So if it hits that, that means that immediately that's a stop order, which becomes a limit order. So a stop limit order to the sell side. In full terminology, that would be a sell stop limit order. So what happens in that regard, we're hoping for momentum. It's totally different, right? Because now you've sold the market with the expectation of it going down after it's going down. It's a little bit easier for people to wrap their minds around sometimes, okay? But there's a lot of benefits to the levels in themselves as opposed to this, okay? So yes, you get momentum. Some of the downsides is that generally speaking, when we enter here, you don't have the profit potential that you would have had you have entered up here into the level. So again, there are benefits to the levels. There are benefits to confirming entries, either or. Again, pick your poison, right? But if you get the location right and we're on the correct side of the market, that's to say buy, sell, or nothing, as long as we get that portion of it right, the trades like this, they're going to work out the majority of the time. And furthermore, even when they don't, so let's say that there's a 50-50, right? In other words, win to lose ratio is approximately a 50-50. So long as the risk versus reward is intact, meaning our reward is greater than our risk, at a 50-50 win to lose ratio, we should be in the money, right? In other words, we should be doing very well. That's even at a 50-50. So what if we get 60% right, 70% right even, okay? So then again, it just increases and increases. The more people trade inside of the trend, this is something we discussed today, the more people trade inside of a trend, the more you're going to fail, okay? So inside of this trend, it becomes much more difficult because you look at it like this, or I'm not gonna say you guys do, I can't speak for anyone, but a lot of people tend to look at it like this and they think for a moment that's a demand level and it can never get broken, right? Well, rest assured that they can and do quite frequently. Now, if I were to look at this on a 10-minute chart, you're going to see, 20, 30 demand levels getting broken. Well, you say to yourself, how's that so? Because you're in an uptrend. So that's not really demand, right? No, it is. Absolutely. A demand level is a demand level is a demand level. But what you don't know is, and here it's going to circle back to what we began the conversation with, the imbalance of it, right? So you cannot tell, for all intents, unless you're reading order flow real time, we don't bother with that because we're not basing our information on real time. We're basing it on historical data, right? Just to throw that out there. And anticipation as well. That's where we'll talk about the Fibonacci numbers in combination with the supply and demand, all right? But anyway, guys, inside of the trend, a lot more risky. So what we're looking to do is either trade at the beginning of the trend. In other words, after the huge downtrend, my goal is to get long from the very bottom if possible. In other words, I'm going to put a pending order down here if I can, just like I did up here. Okay, so remember what I told you a moment ago. We literally had a pending order sitting right there for, I don't know, I think a week at least, something like that. Now that's not common. We're not always going to have it a week in advance, but in this case we did. We also had a couple back here as well. There was a 2750 level, which was right in through there. It fell away very nicely. And then right up and through here, I believe, I can't remember exactly. We'd have to ask some of the members about that. And this was the next area, right? The 291050. So that's my goal, is to just hit it from the beginning. And then I don't have anything to worry about, because when price starts to drop like this, I now know that if proven wrong, I am utterly wrong. Like there's no question about it. The downside, however, is when we get inside of the trend, there really isn't much of a way to prove me wrong other than to go up and just revert the trend, right? So I would call that a resumption of the uptrend. And that will definitely do it. But by the time that happens, if I'm entering way inside of the trend down here, that's not very ideal, because for all intents and purposes, this exact same scenario back here is very common, right? That's very common. Generally, that should not fail. It shouldn't. Granted, it is a valley and so on. We're not going to go into the nuts and bolts of that, but it's common that these fail most often when there's demand just below it, or if you're talking about supply, it would be just above it. But that's the reason that this occurred. Having said that, though, still, if the buyers are truly in it to win it, all right, like a little quote there. But all joking aside, if the buyers are really strong, that generally won't fail. Okay, those levels won't fail. But because we're inside of the trend and we've already had a pretty extensive move up, we begin to use these not as levels per se, but more of pointers, which is ironic, I know. But the valleys, the peaks and the valleys, if you think of that like an arrow, I wish you could see me right now. I'm basically formulating a triangle, right? With my hands. And if you take the triangle, let's say like you point up to your nose, yeah? So you can let's go ahead and, I'm just kidding. But if you take both hands and you point up to your nose, you're forming a triangle. And then if you extend your arms and you go down and you point straight, you just take the triangle and point directly out from you. That's what I view this as in my mind, right? It's like a pointer that says, hey, this is what I am, but I'm trying my best to show you something, you see? And it's a wonderful thing, because if you really focus in on that, this right here, as prices decline, let me draw this a little bit better for you. So as price is declining like so, when that happens, that big strong move up like that, right then and there, I know right now, there's no reason to wait or delay. They've already shown themselves. So you might think, well, what do I do with that information or what have you? Think about this. Think about a 4-hour chart showing you where the demand is. And now think about what that picture looks like on a daily chart. You wouldn't even see it, right? You see what I'm saying? You wouldn't even see this. So when you look at the daily chart, the daily time frame, right, and you go into that, you will come to find that there are tons of patterns within patterns, trends within trends, and so on. And you'll also notice that the daily levels almost never fail. Now, that's a very bold statement, which is, it's not really fair to say, but they don't fail that often. Let's say it that way, right? They're very, very strong. So, I mean, if you halfway get the market condition right and the direction, just, kind of sit back and point your arrow and throw that puppy at a daily level. For the most part, it's going to work. But it's too big for a lot of people. They say, I can't trade the daily levels. So we have to use the smaller time frames. Inside of those daily time frames, you can get, remember we talked earlier about the things becoming convoluted? Well, I'm starting to get there with you, right? Because now we're going to start complicating things a little bit. Whereas before, I could have just thrown my arrow and been like, yep, that's approximately the area I want to buy. Let's do that. It's because it's a bigger time frame. Well, now I'm going, no, I want to mitigate my risk. I want to get pretty extensive with a small risk and really defining where the orders are going to force a turn. So when I do that, that's when I start to talk about things like the pointer. So this right here is literally pointing directly at the orders. And again, it's like your buddy. It's trying to say, hey, trying to do you a favor here, right? And that's it. So if you look just to the left of it, that's all you have to do. So on the low of this, if we go directly back, that's what you want to look for, because this is showing you where it is, right? Now, the same is true right now, okay? And in fact, just this, whatever this day was, what's today, 23rd? So the 21st it was. So 2 days ago, that would have been a Tuesday. On that particular day, here's what we said in the live room. And if there's anyone in the live room and people can see your comments, feel free to chat about it. There is, always an open book with all of this stuff, right? So on that particular day, this is what we said. Let price drop, right? So remember, we were actively seeking the short position up here. However, this is very important. That was short term, only to get back to where the larger time frame was telling us to do the opposite. In other words, we wanted to be the buyer down here, but the seller up here. Okay. So if we talk about the context of a trend, how it functions, okay, it goes up and down, and all it's really doing is ranging in a diagonal fashion. So if we understand that very basic function of a trend, it's not so complicated after all. So anyway, with that being said, on that day, we said, okay, here's what's going to happen, right? Now we left before it happened in the room, so they got to see it work out through the rest of the day. But we said, look at this right here. Here's the range, okay? Look at the pointer. So on that day, it was quite easy for us to say this. There the buyers are right there, okay? Look right below it and into this area right there. So again, the market was doing us a favor. Said, hey, I'm gonna do you a favor here, and I'm gonna show you where they are. You just have to know how to look for them. And actually, you don't even have to do that, because I'm doing it for you. I'm speaking as the market. So the market showed us, it pointed right into them. My expectation was that it would indeed reach them, and that's where price would turn back to the upside. Indeed, it did do that for the rest of the day. So that's all good. Let's skip. Again, I want to focus on a lot of education. Couple things I'm going to do here real quick. I wanted to talk about Fibonacci, couple things to help you with Fibonacci maybe. And then I want to look at a couple of markets. Now, mind you, I'm going to do this relatively fast, and you're not going to understand everything that I'm doing. It's not meant to, right? Unless you've been through our material and you've been in our training and things like that. But I am going to put a little bit of a spin on the volatility in the market, so that hopefully it can help going forward. All right. Okay. Let's see. How do I want to start here? Why don't you guys, let's see if you have, honestly, I'll probably take the first two markets that come in. Let's just get started with that. I'll take the first two markets that come in, and then I will discuss the Fibonacci as well. Okay. All right. Todd has already got in the NASDAQ, so that's one he wants to look at. All right, very good. We'll certainly take a look at that. So let's go up here, redo that, okay? And remember that the markets are extremely volatile right now, but I am just telling you guys from the bottom of my heart that the market functions, okay? Meaning that it's gonna move. What I'm saying is it moves the same way, okay? But the volatility and the ranges are going to get larger in the market. So what could have been traded on, a 5-point stop 3 or 4 months ago is now turned into, I don't know, a 15, 20-point stop, right? So being adaptive to the market is very important. But when I look at the Fibonacci extensions, I will tell you in our room, we don't talk about them a ton because we teach it more in a visual way. So we don't necessarily go and go, okay, well, let's put our Fibonacci ratio on here and give exact, like it has to touch this point and that type of thing, because we use visual aspects like trending channels and things like that to accomplish the exact same thing. But I have found that over time, a lot of people need this, like they need that really specific number, and it helps them to mentally get through it, right? So if we look at the company trend, what we're going to come to find, and I'm literally just going to draw a most basic trend. And I think anyone would agree that's a pretty basic trend, right? But even as basic as I can make it, that's just me drawing. You'll notice that if I go grab what's called our PFA fib zone, and you could also use let's see, I think it's called, Fibonacci retracements there. You could also use that trader's basic Fibonacci retracement tool. We just have enhanced the retracement tool over the years because we work in zone theory, so it works better for us. So every time I move to the upside, I'm always going to work to the right, all right? So meaning from the left structure to the right structure, and I'm going to pull from the origin to the end. So from here, I started here, and I moved to next structure. So so that's like 2 points, right? You get 1 point at the beginning. The second point is your midpoint, and then you have a final point or third point, if you will. In a trend, the anticipatory move there is 38.2 to 61.8%. It's already starting to seem systematic, but really that's a pretty big range, don't you think? I mean, ultimately, you're giving, a 20. Well, it's a pretty big range. 20% is a big deal, right? So even at 20%, you're only talking about 58. So you're really over maybe 23 23% or something. Can't really do the math right off the top of my head, but roughly about 23%. So you're not saying I expect it to touch this to the tick. You're simply saying this is the range to which I expect price to turn within. And what you do is you just keep gravitating with the market, right? So when a new structure low forms, which is going to form inside of the previous area, right? So inside of that 38.2 to 61.8% value, what I'm then going to do is expect another one, right? So a duplicated move, if you will. So what I'll then do is I'll take and I'll start at 0.1 and just rinse and repeat. I pull from the left to the right, and that's going to give me the same thing. Now, if you notice, all I did was just draw a basic trend, but it's almost like that's not rocket science here. It's almost impossible for me to not draw it landing right in here. I mean, unless I were to just do something like that, in which case that doesn't even look like a trend, right? It'd be breaking it anyway. So it's almost always going to land in that area. And if you have a clean trend, voila, good to go, right? So I can quite literally just keep moving with the function of the market. And those are, a lot of people refer to them as ABC patterns, I think, 1, 2, 3 patterns. Everyone's going to have their own kind of terminology, right? What I want you to do is wipe all that stuff out, because who cares what you call it? At the end of the day, I need price to be in a location. When price is in that location, it becomes high probability to the buy or sell side, dependent upon the direction, of course. And that's the end of the story. So we can, you can put any name you want on it, but again, at the end of the day, I just want it to be at that location. So as I progress, I simply keep moving from the left to the right. And here's what this one's really going to put it into perspective for us. So you can see how this pulls back, right? And again, we're just landing. I just want to land in that location. So that's pretty common. So watch this though. what you come to find, and again, you know, you don't have to be perfect. It doesn't have to hit the top or hit the bottom. It could be right in the middle. But when I start to add in all of the other pieces to the puzzle, you start to increase the different style traders who are going to be doing the same thing as yourself, right? And I promise, Keith, I'm going to start working real fast because I know I need to get out on time here. But notice this right here, right? So you're pulling back. Number one, you have support from the trend line in itself. Number two, you have previous resistance become support. Number three, how did you get through that resistance? A demand level, right? So there had to be demand there in order to get through the supply or resistance. So now you have three things working in conjunction with one another. And if you can arrive at that area, just focus on the location. In my opinion, that will be the strongest and best opportunities, especially if we're trend trading. Because ideally, like I said, we want to not be inside the trend necessarily. We want to be at the beginning of a trend. So if I'm going to be the seller, here's my very basic trend. Okay. So I would like to be the seller right now in an attempt to do, of course, a downtrend. Well, that's one option. I could pending order. Number two is I could have double tops. I could have, again, our confirmation entries. I could have a break of the trend and, you know, maybe reversal, something to that extent. It doesn't really matter because ultimately, if we get above that point, I know I am wrong and I just have to accept defeat. Okay. So we'll focus on that. And the other thing about extensions, this is where we want to pay attention in a volatile market, especially in a trending market for an extension. So I want to do a little bit different here on my fib tool. Instead of pulling up, right? So instead of pulling from the down point, if you're the valley, if you will, so from the V pattern up to the top, I'm going to do the opposite to now form what's known as a Fibonacci extension. So I'm pulling always again from the left to the right. I'm going to pull from the left structure down to the right structure. And what I'm looking for is how far is price going to the upside, right? Now, my minimum number in a trending market is 127%. If we surpass that, I look for 161.8%, followed by 224%. But in volatile markets, you'll come to find that it has the capability, and often is very common, that it overextends itself, which is exactly what we want to see, especially in volatile markets. So here we're going to go. We're going to do the very basic information. We're going to put the trend on there. And then we're going to put the Fibonacci tool. We're going to pull from the structure high to the structure low. That's going to give me my anticipated third point, right? If we can get up to the 224%, that is great because now I'm using exhaustion, right? I'm using market exhaustion, and I can all but guarantee you 90+% of the time, if you're on a single time frame, of course. So if this were a daily trend and I were to put, let's say, a daily Bollinger Band, RSI, stochastics, keep naming them, go at it. I don't know, an OBOS, right? Any overbought, oversold, an oscillator, if you will, almost always it's going to show me what I already know. So over here, it's going to show me when I arrive at this area up here, it's going to be overbought. But didn't we already know that? All right. So what my goal is to do is to be able to get ahead of that. Okay. And then look for one of our opportunities. And that's a supply level at this specific location and or again, the DBD, which is all derived from our software. Now, of course, that's, let me retrace my step there. It's derived from the markets. Our software just, you know, does it for us, but we do teach you how to do it manually. We don't want you to 100% rely on software, although again, we're capable of automation. We want to be very careful with that, right? So the very important part to us is learning how to do it efficiently and consistently, and then using the software. I think I mentioned that at the beginning of the session, in fact. All right, real quick, guys, I'm going to do some NASDAQ analysis, and we're going to have to move quick here. I can't keep keeping the guys over there waiting, yeah? All right, so we're going to go to the NASDAQ. The MNQ is the micro, by the way, okay? Now, I want you guys to see how our software functions. It is very straightforward. Red, green, all that. You can make the colors whatever you want. This is supply. This area is demand. Now, let's look at what has just happened in the past couple of days. We went up. We revisited this. Let me get rid of these for you. we revisit the supply level. And again, we can get really complex if you guys want to. We can start talking about the order flow at the location, and we can do all kinds of stuff, but I just don't have time today. Specifically, however, this is where we would have been looking, right? And you can definitely see that's where price turns. We'll go into that in our free sessions. Make sure you, 1 second here. Keith, if you can do me a favor, or maybe I can post it to everyone, I don't know. Would you mind sharing that there for me? That'll get them, at least you can sign up for our free events and we'll go into much more detail. But I can't do that today. I don't have the time. So what we're looking at is, again, supply demand levels and so on. And as you can see, we come up into this area and we drop away, right? Now, in this instance, we quite 8341 quarter. So we came, as you guys can visually see there, we almost touched the level. And what happens? We rally away. Now, what happens from that point, though? Well, we go up and touch the new supply level. And what have we done since then? We're dropping away. However, as of right now, we would play the game. This is what we'll do in the room. Play the game, buy, sell, nothing. I will tell you guys this. Here's what I'm looking for. And I'm gonna move through this so that you guys just, I'm sharing with you, being transparent of what I'm looking for personally. I have been, as you know, if you've been in our free events, you know that I've been shorting from the top, but also simultaneously dollar cost averaging. So we're hedging, if you will. And that's what I really want to get to you all in the next free event that we offer. I want to get back into that because it can substantially protect us in a crazy volatile market. In fact, I don't even know how it's possible what we did. And some of our members maybe can share that with you. I don't want to go into actual money details too much. I don't like talking about that, but it's interesting how the markets function, right? So on the way down, shorting the market at the same time, simultaneously dollar cost averaging. And as price rallies back up, already having surpassed the area to which our average position comes out at, right? So I don't know if that makes sense. It probably does to some of you. But for those of you who don't worry, we'll get into that in some of our sessions. So we look at these and we literally ask ourselves, look, what is the direction? Is there anything to stop me? And then that's it, guys. We want to keep this very simple. So the NASDAQ is in an uptrend. I wish that we would have been here, a few days ago and you would have asked me that same question, because I would have very definitively told you that 83.38 level was an intriguing area for us. In other words, I would have been a willing buyer there. I, however, would not have done it on this time frame. At that junction, what I do is I take it, I arrive at the area, because remember, these are larger areas. So I take the NASDAQ, 83.38, I arrive at the location, and I'm quite simply going to do this. I'm going to go over to my NASDAQ. I need a little bit more data here. I think I might have enough there. Okay, to my NASDAQ, and I'm going to start looking for that reason to buy. Okay, so it'll come in on the 4-hour or the 60-minute chart. Remember, it's on the decline. So I will point out this because this is exactly the same thing that we saw on the S&P, and so I'm just going to share it with you because the NASDAQ and S&P are trading always pretty fair in tandem. They're not completely correlated, but they're index markets, so for the most part. So what you'll look at right here is that location, right? So when the direction changed here, look at that green line right there. That line right there became the entry. Okay, what have I now done? Well, I put myself right down into the area. Granted, it didn't touch the 38.75. Okay, like I said, we're not looking for perfection because this confirmed it. Now, had this not have confirmed it, I would have never entered there. No way. Oh no, it would have touched that 38.75, or I would not have moved. I wouldn't have done anything. But when we get that information, further confirmation, if you will, we can move ahead with that new direction or what is likely to be. So that's really what we have to focus on there. The NASDAQ as we speak, let's do that real quick so I can conclude a little bit here. I'm sorry, Keith, for this. Okay, so the NASDAQ is in an uptrend. My bias, right, has to remain bullish in this market. I will tell you this. Here's what I'm doing myself. This is irrelevant to any of you. It's not going to do you any good other than for me just saying that I shared it with you. Do you see this line right here? Okay, yeah, hopefully you do. The red one, it says 8341.3, 0.75, but it's 3/4. So 83.41 3/4. I personally am not looking at this. I'm looking at the S&P, but it's the same picture. Okay. So as price drops out of here, number one, I'm falling from a supply level anyway. Number two, the direction has been up for a little bit. Now, already we've had the long opportunity. So I would either hold on to that if I entered the position. Conversely, I would look at a trade to the downside on a break of 83.41 3/4 myself. Okay, that's what I'm doing again on the S&P. So if we break this structure low on the S&P, I'm going to go ahead and get back into the market to the downside. And ultimately, if we scrunch up the chart, it begins to paint a picture that looks a little something like this. Okay. So if you were to take this to, say, a weekly chart, you'd see that this is just a pullback to go lower. So anyway, that's what I'm focused. But right now, I would not, let me be very clear, I would not do anything. There's very definitive reasons for that. Why would you not be the seller, Will? Are we in a downtrend? No. Are we arriving to a new supply level? No. Well, then why would I sell at all? I wouldn't. Okay, there's the answer to that one. Why wouldn't you buy, Will? Have we not already declined and pulled back and started to rally away? Yes. So we've already arrived at our location and more importantly, left it. Okay. So we're not declining anymore. Therefore, I'm not going to be down there waiting to be the buyer. Right. And again, this is what I call, it's a joke. I call it a consolidation, but it's really a consumption pattern right here. And if we break this, it is somewhat likely that we would have a momentum one-to-one drop out of it. So it'll be very crucial to watch this, especially for myself. But ultimately, guys, it's very simple. I remain bullish in the short term until the break of that low, to which I will then go ahead and take a short position. All right. Sorry, guys, I've killed the time here. Let me see if I can answer some questions. I really do, I really do hate that I just can't keep Keith in here too long. So I'll take some questions real quick if you have them. But what I would say is jump into the, it's not like you're signing up to buy anything. This is completely free. These are free events. So the link that hopefully was able to be shared with you, if you just register your email there, you'll get the invites to the events, right? Todd, good question. It's actually already out. It's just in beta. So that's only available to our beta group and they're already using it. Yes. So it is already out. As far as a public release date, I don't have one, but guys, I'm telling you, I really would love to have gotten into this today. I'll show you real quick. I see because Keith's super duper awesome. Thank you so much, man. I really appreciate that on the time, by the way. Yeah, so with the strategies you're asking about, okay, the automation, if you will, we can build all kinds of entries. So our entire tool, everything that's in our toolbox, we have supply, all of our levels, of course. We have altitude, continuations, Fibonacci, market structure, all this stuff, okay? Everything can be fully automated. So yeah, that's something that you might want to get on the email list there for. We'll keep you updated. So this is automated right here, by the way. Yeah, this is being automated. And you can, of course, you can do like performance and stuff. So yeah, I mean, this is just how you kind of test your theories and all of that. You can build trade plans based on it and all of that. So I could go back, and one of the more benefits of it is that I can remove my emotion. So if I say here, yeah, absolutely, I know that the market's in an expedited uptrend, so I'm willing to be the buyer. I can just load a demand template really quick, and then I don't have to do anything, right? So again, in here, I can make any of the alterations based on conditions. So I could say buy demand levels on this time frame if in an uptrend and the market structure is in agreement and the altitude is not disagreeing. I mean, we can condition this puppy all day long, right? So again, it's building entire strategies. That's basically what it's doing. Yeah. Very good. Yeah, I can't give you, I'm sorry, Todd. I know you were asking and the rest of us, I can't give you a definitive date on the public release yet. Yeah, but hopefully it won't be too long. We're working, and I'm sure they'll tell you, boy, we are working diligently as far as, getting the updates and everything like that. So we're looking really good. I would say it's probably not going to be too much longer. So just jump on the email list and we'll keep you updated. Absolutely. Okay. Any of you have any other questions for me real quick, guys? Anything, it doesn't matter, whatever it is. I didn't get out to a lot of markets for sure. I wanted to do that, but to be honest with you, I didn't see you guys requesting them. So, yeah, that is something that I always ask you to do. I don't really know which markets that you guys like. So, it looks like you are in the sell zone below the trend line. Are you talking about the NASDAQ there, Tom? So it looks like you're in the sell zone below the trend line. So just remember that when we arrive at that, okay, we were definitely not. Remember, we're looking for the supply before we get there, and that's what's super duper important. If we're looking at it after the fact, you're right, and that's why I'm telling you right now that I don't want to do that. You see what I'm saying? Remember what I said a moment ago? I said I don't want to be the buyer now because it's already declined down to the location to which I did want to be the buyer and left. So that's the important part right there. Yeah, I agree with you absolutely. So once it breaks this low, it will be pushing on a downtrend at that point. So it could just, again, it could go back into a downtrend, but I'm not going to try to predict that. I'm not even going to say that it's going to do it for sure. Right now, what I'm telling you is definitively it is in an uptrend. I remain bullish. However, in the event that that low right there gets broken, I'm a seller instantaneously, just like that. So that's how methodical we try to keep it. Always, it really helps with psyches and whatnot. Let me see if I can go through real quick. Yeah, it'll work on range bars. Yep. Yeah. So, thank you, Jacob, for your question there. Let me go through the chat and see if I see any questions here. George, I think probably that's a question for Keith, but I'm sure that I'm sure he probably will. Oh, as I see, he did there. Yeah, awesome. Okay, the British New Zealand. I see you, George, asking for that. Keith, would you mind if I do that real quick and then we'll call it a day? I hate to leave with one question remaining. If that's okay with, if not, it's perfectly fine. I can do this in our, in another time.
You guys know our style. As long as you guys are interested in what Will has to say, we're happy to stick around. So, yeah, go for it.
You rock, man. I really appreciate it. Thank you so much. Let's pop on out there then. Let's do it real quick. Let me see here. All right, so we'll go. Let's take oil. Man, you guys really, I'm telling you, I wish you could have been with us the whole time watching oil, by the way. Incredible. So we've been bearish oil for a long time. And oh man, the other day, this was insane, right? I don't know if you guys keep up with oil, but it went into negative territory. It's crazy. So British, New Zealand. Let's see here. All right, so we're gonna have to convert all of this. So just give me, give this off for a second to load there. I'm trying to think if we've looked at, trying to think if we have looked at the British New Zealand anytime recently. Don't really know. Hang there for 1 second, guys. Let's see. Well, let's see. Did I mess my chart up? Perhaps I did. Oh, I think I froze my chart. 1 second, guys. Let me delete this chart. I'll just reload a new one or something. Hang in there for 1 second. Get up a new chart. Oh, okay. We're good. I think. Hold on. Let me close this out. It's going crazy on me all of a sudden. Okay, here we go. So simple, right? We're going to keep this super simple. It depends on, also remember, it will depend on what time frame and all that stuff. So let me be very clear. I was very clear about this, as I always am in our room. I am not going to sacrifice my very strong beliefs. Okay, I'm just not going to do it because I don't believe in it. So looking at scalp trading unfortunately, it breaks my heart, but I have to say it. We were never going to be the right fit. It's just unfortunate, but it is what it is, because I don't believe in scalp trading because, well, number one, for me, it wasn't that great for me. Didn't work that well for me long term. Therefore I don't do it. And I feel that it's a disservice to, members if I'm showing them something that I don't do, right? That I don't believe. It's like, why would you do that, right? So anyway, I'm not going to, I think, well, sorry, Joseph. Yeah, so you're asking about the 1 or the 3 minute charts. I would tell you, I will definitely put our software on the chart for you. But as far as being an active trader on that, it's just not something that we would ever do, right? We generally try to keep people on the 60-minute chart, right? Or, again, the 60 or 4 hours, sure. But generally we try to keep people up that time. For example, today in the room, we went to the 10-minute chart, but that's as low as I go, the 10-minute chart, just for obvious reasons, especially in the beginning. It's very difficult for people to reduce the noise. And you have a lot of just up and down, a lot of levels, a lot of trends. And as I mentioned at the beginning of the session, you're going to have like, a trend within a trend within a trend within a trend. It's so many different conflicting pieces of information. And that's why we just prefer not to do it. We just want to simplify things. Okay, real quick. So here we go. On the British New Zealand, we have a very nice, what appears to be an uptrend. Obviously up here, we've shown significant supply around this 21,800 area. So I want you to pay attention to something real quick. Remember earlier, okay? Remember earlier what I've said to you all. Remember about the pointers, okay? Remember about the pointers. So 2 things I want to bring your attention to right here. Number 1, we have continuously dropped away from this area now multiple times. But let me really key your eye into something here, okay? You probably already aware of it, some of you, maybe some of you not. But here's what I want to do. Number 1, I'm going to take all of this off for a second because I want you to see this very visual and very basic. If I know where the supply is, then I can trade against it, right? But how do I know where the supply is if it hasn't shown me yet? So I have to know, in other words, I need a supply level or I need a pointer, right? I need to know where those orders reside. So if this is to be supply, and on a short-term basis, it certainly was, because you can see here, there was a very, I'll show you, I'll draw it in for you. Ah, goodness, my mouse. Okay, it goes a lot smoother when I'm in my office, by the way. Yeah, but we had all of this information to the upside. So as you can see right there, we created a very strong break of that very short-term direction. So I would show you this on the 4-hour chart. It would be a lot more apparent, all right? Suffice to say that we broke that very short-term trend. Okay? So here's what we need to look at. This becomes a range. Now I know that because there's no trend. The only way for us to form a trend is to actually go ahead and take out this low and form another peak. Or conversely, I could take out this high and thereby redraw my uptrend. I would have to adapt it. It would be a resumption of the uptrend, right? But either way, I'm stuck within this trend. So what is happening is or what should be happening at least, is there's a range that is in effect, okay? And it's like probably you've heard a million times, buy the lows, sell the highs of a range. So until we break out of the highs or lows, I believe we're going to just be stuck in this range. Now, how do we determine where the supply is? So if I really dive deep into this, I can specifically look right here. And I can do that because the first time we went back up there, right? This is really the first rally. And notice right there, the second, that we touch this area, look at that candle right there. It shoots you back all the way down here in the same day. That was very strong, right? So if we read into this stuff, you can really start to simplify it and understand what it means. And then we kind of bounce around and through there for a moment and we go, down here. But what I do is I say, well, yeah, but I already know, it's already shown it to me. So it can't hide at that point. And here's what I have to do. That's where the remaining supply resides in this structure here, okay? So if you look at it this way, look at the high there, extend it over. Look at what happens the second that we get above that, okay? All this is doing right here is going up and it's hitting more sell orders. So let's move that forward now. Let's move into the future. So we'll take this and we navigate over and up. So now, right now, I know where the supply is, yeah? And I can put a number on that even. So I can say, okay, well, what's that, what's that number? 210345. So what I do is I go, okay, 210345 now at my smaller time frame can become of interest to me. So now I navigate over there. And when I arrive to, what did I call it? The 21035, I think I said. When we arrive there, and on my smaller time frame, so if I go over here, let's say the 60-minute chart, it's the British, yep, there we go. Okay. Now, just so you guys understand, all of this can be done via the software. So for example, I can add another time frame zone all simultaneously. So I drew this one just for time's sake, but technically the software will do that for me. Okay. So all I'm looking for, remember, only two things. We've talked about this now multiple times, right? And this is a 4-hour chart. I'm sorry. I'll show it to you here, and then we can go to 60 if you desire. But either way, I'm looking for the same thing, okay? Do you see this line right here? Now we've arrived, look at it right there. So the second that we arrive up in our location, we drop down and we form that line. So I now know that we put in a structure, right? And on the breakdown of that, this is, think about it, guys. Isn't that exactly what I just told you I was looking for on the S&P? It's exactly the same thing, same setup. So this is the picture to which I'm just, that's what I want to see represented on the S&P, but on the not the 4-hour chart, on the daily chart. Okay, but it's the same thing here. You would have just been short-term trading. You see what I mean? And again, guys, circle back to the beginning of the conversation. I told you this is applicable to all styles. You just have to change up the time frames and such. Now, the more of a smaller time frame you go to, the more difficult it's going to become. The more stop outs you're going to take. Why? Because you're going up and you'll have a small drop away. You may form a little pattern or supply level, and then you go up and break that. You got to focus on the location. You got to get there first, especially with the smaller time frame stuff. It's you can really burn our bottoms, Now, in addition to that, we could also look for supply levels. Straightforward, 2 types of entries. Okay, so 2 types of entries. In this case, right out of the gate, there was the DVD. So if we go to the 60-minute chart real quick, you're probably going to have a supply level up there. A lot of people like the 60-minute chart, by the way, including myself. 60-minute chart is great. I'll be honest with you, 60-minute chart was my go-to for years. I would say in the last couple of years, I've gravitated to the 4-hour a little bit more just because I like to trade less. But that's neither here nor there. Okay. All right, there we go. So now that we're on the 60-minute chart, everything becomes so much more clear, doesn't it? All right. So let's do this. Remember, there's my. Let's simplify this for you. Okay, so here's where we started at the high right there, right? And we said, well, there, we know that that's where the supply is. And how did we know that? Remember, we talked about this before, the pointer. Okay, so it's the pointer that's keying me into that. Do I want to be on the sell side or the buy side? Well, if I want to be on the sell side, remember that short-term direction had broken. We're in a ranging market. I want to sell the highs of a range. How do I know where to sell if I don't know where the orders are? But when I learn where the orders are, now I don't have to hesitate anymore. So the second I get above this, just take a gander right over here and watch what happens. Okay, just like that. So as I told you, it's the same thing on that 4-hour chart, same thing here. There's only 2 ways that I'll do this. And the 60-minute chart is, obviously has a lot more clarity because you're going down a little bit smaller in time frame. So the 4-hour chart is not, you're not going to get as many trades, that's for sure. But I got to tell you, I love the consistency of it. So the same thing, right there. So this is a different type of entry. Now, if you wanted the DVD, there it is right there. Either way, same difference. Now your risk becomes larger, of course, with the DVD, but still, as I mentioned before, there's pros and cons of everything. So that's it, guys. Look, all I'm doing is keeping things simple. We play a buy, sell, nothing game. Like I said, we determine what the analysis is of that market. So right now, for example, and sorry about that. Again, I'm so passionate about the education. So right now, I would want to see us get up into, okay, so 21039s, 21039s. I would want to get above that. Okay, again, let me repeat that. I would want to get above the 21039s, and I want to rinse and repeat. I want to show that picture right there again. That's what I want to do. Get up there. I want to go to the 60-minute chart. I want to break the direction. I want to form a supply level, and I want to just hit the sell button, right? Without, emotionally thinking about it. Now, we could get into targets and all that good fun stuff at a different time. Unfortunately, guys, I got to get out of here, not only just for Keith, but for myself. But anyway, let me look real quick if I have any more questions. What about that? Yeah. Oh, you weren't, Joseph, my apologies, by the way, earlier, you weren't asking to look necessarily. You were asking what about the lower time frames? Yeah. So my apologies, by the way, but yes, I generally, I personally never look at them. And even in the room, I'm very clear with everyone. And it's only because I really and truly want to help people reach their goals. And you guys are probably a lot better than I am at that. I'm telling you straightforward. A lot of you in the room can probably make me look very pitiful when it comes to scalp trading. I'm okay with that. It's just not, I have not seen as many people make it long-term scalp trading as I have, doing what I do and even much bigger, of course. But yeah, that's just, and again, it didn't work for me that well. So there's that. All right. Okay. Any other questions, guys? I'm going to try to get out of here. Yeah. Again, though, I'd want to get above this high and just rinse and repeat that process. So again, above the 21039, specifically the 21039.2s, this level right here. And then I literally just want to repaint this picture. All right. So if I get up there, I have a 60-minute uptrend. I break it. I form this picture. That's all that I would be looking for. And my target destination, just so that I can say that we briefly discussed it, would be whatever put me up into there, right? So in this particular instance, had we have caught the sell side here, I can see right there is what put me up in there. So I need to get out before that, right? Over here, I don't know what put me up there yet because it hasn't happened, but I would repeat that. So if, for all intents and purposes, if we rally from right here all the way back up there, well, that's the destination, right? So I would want to exit before this area right here. All I'm trying to do is enter where the sellers are and exit before I get back to the buyers. Okay. All right, guys. Very cool. Okay, dokie. Thank you so much. Keith, all you guys, man. Thank you extensively for your kind understanding. And most especially, I would say that this goes to show, in my opinion, how much you guys also care about your audience, because the fact that you're willing to stick around just because they want to speaks, loudly about you guys. And then also you guys as a group, just all the people in the room, it speaks mountains, the fact that you guys have stuck around, that you're asking questions, that you obviously are here because you care about your goals and success and all that stuff. Okay. So as I said, our prayers are with all of you. If you want a discount, contact us. I'll give you a discount. These are tough times, no worries. I'll offer you the same discount we had last time. And again, just shoot me an email and I'll get that to you. I'm not going to hit you with a sales pitch or anything. But if you want it, contact us and we will discount it for the next, let's say, week. Okay, we'll do that for the next week. And email me and I'll shoot you back the details. Again, I'll just repeat what we did last time for all of you guys here with Shark Indicators, and I'm happy to do that. Okay, make sure you guys get signed up for the free events. God bless you. Be safe. I know that it's a crazy time, and get in the free sessions. I'm telling you, because you probably a good idea to get in there and we'll talk about hedging. Very good ways of protecting our investments in a volatile market. Take care, guys. God bless. We'll see you soon.
Thanks, Will. Sounds like my mic is still having problems, so I'll just let you guys go. Thanks for coming and stay safe. Have a good night. Bye.